So let me give you this thought. With all the TARP money being paid back by the large banks and big bonuses being paid out and the fight going on about that, do you think I kind of look at it from a positive standpoint also, instead of trying to talk about what was? And do you think this is somewhat of a golden parachute for these banks? It's kind of the last hurrah, if you will. They're going to, the shift in wealth is going to happen via this mechanism of these payouts and these bonuses. And then these guys that are getting this money are again, this is the way I'm looking at it. Maybe they're going to go back out and establish themselves as a new VC, a new private equity deal, and start, putting that money back into the game, into new businesses. And as opposed to, again, it's kind of a transformation of the existing companies, the existing VCs. Right. Do you see that as a possibility and as a good thing?
Oh, absolutely. I mean, I'm now, sort of pan-glossing about this sort of thing where it's all going to turn out well and everything's perfect and the market's functioning wonderfully. But by the same token, I see some really positive changes that are coming. One of my favorite data points was, I always like to ask people what was the most successful year in the 20th century in which to create a bank? If you were going to go out and randomly throw a dart at the markets and create a bank that year, when should you have done it? And the answer, of course, is 1933. Right. In the middle of the Great Depression was the most successful time. And why? Because all of these people were getting unsprung from banks. And it wasn't that people no longer had a need for banking. It's that the form in which banking existed, which was far too predicated on old systems and on lending to industrial manufacturers and not recognizing these emergent service companies, as well as being overtied to debt, or overtied to overleveraged companies, all of these things blew up. And so what happened was a bunch of people went on to do other things, but a bunch of people went on to create the next generation of financial services companies, some of which just blew up in the last 2 years. But nevertheless, they found their origins back in the 32, 33 time period. And I think the exact same thing is happening today. So some of these people are going to get right off the street, Wall Street that is, and go out and do things that are frankly more productive for the economy. But others are going to go out and create nimbler and more useful financial intermediaries, whether in venture capital or even in investment banking. Think about the collapse of the four horsemen of technology. Yep. Where are the H&Qs of today? Where are the Robbie Stevens? These guys are all gone. And yet, and we can talk about this, I think 2010 is going to be like a mini 1996 from an IPO standpoint. It's going to be a giant year for IPOs, not just an opening of the door, but like literally having the window yawning wide open. We're at this point next year, assuming the world doesn't end for other reasons, we'll be sitting here saying, oh my goodness, where did this IPO bubble come from? I mean, and so having seen that, there's going to be a new group of financial intermediaries emerge to service that. So there's a bunch of so that makes me loosely optimistic.
Where do you see that? The Web 3.0. I mean, where are these IPOs going to come? Give me some categories that you see this kind of playing out, because it's definitely in progress. I agree with you. There's a lot of whether it's Zynga. I saw Zynga today got 180 million. I mean, crazy money again.
Yeah. So a great example is. Was yesterday the Zynga deal, which was 180 million. People were sort of asking me this morning after the deal was announced. They said, "So what do they need 180 million for? What do they need 180?" I said, "It's nothing to do with needing 180 million." I said, "You've forgotten the way the IPO game works. It's everybody racing in who's been told that if they're the last money in and they're going to get an exit within a year, and so everybody piles in expecting an IPO exit. This isn't about an orthodox, at least my read. This is not about an orthodox financing because they have $180 million worth of business opportunities. This is a bunch of guys who want private shares so they can sell them in the public market.
It's a liquidity event again. Well shift, absolutely.
Right. And so these are a bunch of guys piling in at the end who all think they can sell so this, if you're trying to read the tea leaves of what's likely to happen in 2010, the Zynga financing yesterday was a great data point, because what it tells you is that bankers, VCs, and companies realize that there's going to be a window open up in just yawning 1996 kind of fashion for stuff to come out. So what kind of stuff? So Zynga's a good example. So these sort of next generation mobile gaming companies that are surprisingly, I mean, I haven't seen their numbers lately, but last I recall seeing was something like $150 million in revenues for these guys.
Crazy.
This is second, third hand. There's obviously nothing public and formal, so take that as it is. But also look at companies like I'm expecting Facebook to go out. I mean, who's
2010? You think they'll go public?
2010 to go public. That's my expectation. And so I've actually argued that Facebook will be kind of a Netscape moment. It could be Zynga that's a Netscape moment. And what is a Netscape moment? A Netscape moment is when people forget how the IPO markets work because it's been so long since we've had an IPO market. And the way it works is that it's not that you have this sort of steady flow of things going public and it's orderly. It's not orderly. What happens is there's something goes out, surprises people with its performance, and everyone says to their bankers, Get me more of those.
Right.
I need one of those. Can you find me more of those? Get some more of those public. And, of course, bankers are nothing if not obliging when it comes to getting people more of those. They'll find those wherever they can find them. And so what's required is there has to be a Netscape moment, this kind of emblematic company that goes out and is successful and is recognized as being successful. There has to be more of those companies like that. And, of course, the answer is, are there more advertising-driven, social networky kinds of companies that actually have far more revenues than people expect? Are there more mobile gaming companies that have more revenues than people expect? Are there a bunch of these companies out there, some high quality, some less so? Absolutely. Hundreds. They're all out there. You may not like them. I may only like 2% of them. It doesn't matter. Once the window opens up, they get slurped out into the capital markets. And so I think a combination of a Facebook or a Zynga or something like that will turn into a kind of de facto Netscape moment in 2010. And then the window opens up and it all comes tumbling out. And this time next year, that's the conversation. It'll be, where did this IPO boom come from? And this is where it came from.
So Twitter obviously might be jumping on that bandwagon.
I absolutely, if not 2010, 2011.
Right.
So this would be another